Welcome back to your Mortgage Insider Update. This week we see mortgage rates and rates overall hitting multi-decade highs. Again, we continue to see pressure higher as the economy continues to show strength with consumer retail sales coming out very strong today. Let's take a look at the charts. We start October 17th off up higher 12 basis points to 4.8236. We can see that is not quite as high as we've seen the highest point, but if we were to close here, we would be at the highest point in multiple decades as we see pressure on interest rates higher, even in the face of unrest in the Middle East and the concern over another major war breaking out. That is still forcing interest rates higher, and the stock market is also doing very well. We dive a little deeper into the mortgage-backed security market. These mortgage-backed securities are sold into the secondary market. As the price drops, the interest rate to the consumer rises. So we can also see the inverse of the yield on the 10-year Treasury with hitting the lowest point we've seen in these prices since October the 6th, when we actually pulled back that day, saw some improvement, and then now we're seeing reverse to the negative side on, like I said, retail sales. Retail sales came in twice as much as expected for the month of September at 0.7% annual rate of increase. That is showing strength in the consumer side. Economists were expecting 0.3%, so coming in at 0.7%, much higher. We also saw a revision higher for the prior month in August. So all in all, the consumer seems to be chugging along strongly, and that is cause for concern with future potential rate hikes still on the table with the Federal Reserve. They do have a meeting coming up beginning of November, and we're not expected to see a rate hike at this meeting, but coming up at the December meeting, there could still be on the table another rate hike if we continue to see stronger sales, good employment figures. We won't know the outlook for the fourth quarter until we get a little deeper into it, but we are a couple weeks into October and seeing a still strong economy. With that, we'll talk to you next week with a new update.